All right, good morning, everybody. So like we usually want to do, we start out looking around. We look around the world, make sure that nothing is going on out there that could build into something else. Check what happened in Asia, see if it carried over into Europe. Right now it's like midday Europe, so 12:30 in London. A lot of times this is where the central bankers will start chipping their teeth, having a little bit of a news meeting, things like that. So we want to just kind of take a look around. Financial Juice is a great place for this, since it also has a list of speakers along the side here. Today we've got a Fed speaker at 12:30. If you'll notice, I said 12:30. This says 11:30. It's my local time, not market time. So you got to be careful when you're looking at those. Make sure that you understand what it's telling you. The ECB is very likely going to rock this market this morning, kind of waiting. We got a few minutes before the ECB president is supposed to talk. I believe that was right there. About an hour at 8:45, president is going to be speaking. There's a little bit of a disconnect between different factions right now. The ECB president is reaffirming her intention to hit with a 25-point basis, and others are saying 50 would be better. Kind of sounds familiar, right? The European central bankers are having the same issues that the Fed speakers here in the U.S. are having. Keep your eye on this morning as we come into the 8:45 time frame. Just make sure you don't get caught off sides if she happens to rock the boat. Just remember, with her, it's no different than over here. A lot of times that is the operation, right? Don't rock the boat. Open their mouths and do a lot of talking without actually saying anything impactful. So we got 8:30, 9, 10, 11, and then 1 o'clock. There is a 7-year auction today, and a complete lack of liquidity on the 7-year. So, watch for a little bit of violence perhaps coming in at that 1 o'clock auction. Inventories is a big deal. A while back, we talked about it during the Zooms, during this morning briefing. The idea of having too much inventory or seeing inventory corrections. And I mentioned it last, maybe earlier in the month, that this is going to be something that you hear more and more about. Well, today we're getting some data on that. So definitely want to be prepared for a little bit of disconcern in the market if the numbers don't show what everybody's looking for. All right, we're looking at a daily chart on the S&P futures. This is year to date, so from January 3rd all the way up to today. You can see the swing low and swing high in very clear, distinct detail this way. I think it stands out nicely. Relatively easy to understand where we're at in the swing. Now, the swings can become muted. We've seen it here. So it doesn't owe us a full roll, right? From that low where it came up and just kind of got stuck there. So we came off that low. We got that bit of a move up, but if we get another shunted swing over, this would be the place where we would expect it to stall out. If we do happen to manage to get through this 3,900 area, then we're looking at 41, maybe 41.5, all the way up into 42. It's entirely on the table, but we have to get through this midpoint that we're at. So that's what's on the table at the moment. That explosive move from Friday only gets us so far. And all of this needs to be resolved. While we're out here, it's worth noting we're still underneath the anchored VWAP, which is that cyan line. And the weekly expected move top is 40.14. Everything keeps lining up to 4,000. So we get this breakout today. We want to check to make sure it's within range, but it really just seems like that's the next stopping point. So as usually, we want to game this out, put it into perspective. Only three things that a market can do, right? Go up, go down, stay sideways. The sideways argument would be the idea that we stay inside of yesterday's price action. And while it is entirely possible for us to do that, we got to ask, is it probable that we would do that, right? What's more likely? It's a good way to try to approach each day. Is it likely that we maintain yet again a very narrow range? Because yesterday we only, quote only moved 50 points ish, right? A little bit of movement, hardly nothing. So the argument's going to be, are we going to maintain that yet again today, or get a top or a bottom side breakout? The money flows and the moves within the other markets point to a topside breakout. The red line at 39.62 is half the ADR, and 40.14 is the full ADR. Now remember, ADR is the average, the normal. So making 2.3 or 2.6% move today, if we did get bullish and start really rocking it out, the S&P moving 2.5 or 2.75% in a single day would not even be considered extreme. Extreme would be seeing a 3.5 or a 4% move. So we do want to game it out. What is our signposts or benchmarks? Our own Globex high would be the first, call it a hurdle, the first hurdle we need to get through. That'd be 39.37. The second one would be yesterday's high, which happened in the Globex, 39.48. Then we would start messing with those ADRs, right? So if we get an inside day breakout, get above 39.48, we're going to be looking for some sort of Busby. Busby is a general term that I came up with. Obviously, I'm not the one that has first identified the logic, but to me, it needed a name. right? Because I got tired of saying the same sentence all the time. When price gets into an area of resistance and then it finally breaks through that resistance, what it very often does is pulls back to that old resistance, and it confirms that that old resistance is now support, and then it continues to do what it's doing. Well, I get tired of saying that sentence all the time. Old resistance becomes new support. Old resistance becomes new support. So I put a name on it. Busby. When a market breaks through its resistance, it very often pulls back and validates that old resistance as new support. Busby. It doesn't owe us a pullback, especially if it's a momentum breakout, but very likely we will see that kind of move, right? It's what we see a lot. So it's what we look for. So we're very likely to get a Busby off of that breakout, and then we'll start working on those ADRs to the upside. I would add, since I went ahead and found the mark, 39.31 is another overhead resistance. That's the RTH high of yesterday. So we have the RTH high and then the Globex high, and both of those would be pivots of concern. When we get there, there's very likely going to be a response or a reaction out of the market. So those are three different areas that we would need to fight through in that discussion of a topside move. So let's do the bear argument. If we were to continue the move to the downside, we have the 4 o'clock close, the RTH low of yesterday, the Globex low of yesterday, and the Globex low of today. Now you can always add things like IB, initial balance, which is a 1 hour open range from 6 to 7 at night. You could mark that hour high and hour low. Initial balance is used for all kinds of things, but generally speaking, we're looking for how much movement happened in that first hour. Because if you think about a firm having a set agenda on the day, if they need X amount of contracts and they get all of that done very early in the trading day, their trading day, then they don't need to come in later on, right? If they're already done, they're done. So we're looking for the size of the initial balance. Was it expansion? Was it a large 1 hour open range or a narrow range? A narrow range implies that there's still work left to do. And for the downside ADR, we're looking at 38.59 for half the ADR and 38.08 for a full ADR. I got to say, if we get to 38.08, then we went through the cog line at 38.11, and we are close enough to 3800 that we would very likely go to it. If we get that close to a roundie, we're very likely going to just hit the roundie. So we're looking at a volume profile here. I had readjusted it yesterday when we were looking at equity markets in the live stream. So I need to readjust this to a different time frame. There are two that we use. There's a 1 hour 20-day chart, and then there is a 30-minute 10-day chart. So when I swap it over to the 10-day chart, you kind of got a better idea of the way things normally look. You can see that there is some volume underneath us. The entire cluster of yesterday's volume, that's right around 39.20. If we start to fall below that, or even put it into some perspective, if we low that I pointed out this morning, 38.86, there's nothing else down there. And we're very likely going to move through that area very fast. Right? So if we break our own Globex low, there's nothing to catch us, nothing to slow us down. And we're talking about pretty much coming into the top of the value area, which is 3,800, before things start to calm down. It's an air pocket of risk. As we usually do, we want to take note of where are we within the construct of this profile. When we're at the top of the box, we usually have an idea that we're going to the bottom of it. When we're at the bottom of the box, we generally have an idea that we're going to the top of it. When we are outside the box, we want to ask the question, are we moving farther away from it or are we moving back towards it? When we're very far outside the box, we have every expectation of going back towards the box. That's general consensus. That's what we would expect to do. So when what should happen doesn't becomes very important on a day like this. What it should do is move back towards the box, but it doesn't necessarily have to do that. Like we've talked about before, one thing that it could do is just stay right here. If it does that, slowly all of these candles are going to fall off, right? As every new candle prints, another candle falls off back here. And after a week and a half, all of this volume down here is going to be gone, and we will have the volume profile sitting up where I now have my box drawn. But it would take over a week to have enough candles printed on the right side of this to get rid of all of these from the left side of this. But that is one way that price can get back inside the box. All it has to do is just hold this level, and day by day, the box will come up to price. But that's not normally what happens, right? Instead, what normally happens is that price comes back down and meets the box at least somewhere in the middle. And since there's nothing to hold us up in the middle, if we start coming down and break that Globex low, we're very likely just going back to the box. We had an untouched point of control from Friday, but it got touched last night. A little hanky panky. So that's off the table. Although the argument could be made that if you touch a point of control in the middle of the night, it doesn't quite count, and that we very easily could still count it as an untouched point of control until it is touched in the intraday. I don't really subscribe to that argument, but I've heard it before. Either way, it's the only one that we have to carry forward. All the others have been touched. And like I've argued before, while I don't do it, it is worth carrying forward the value area low and high if they haven't been touched. So we do have a value area from Friday that we could carry forward. And that would be right around 38.75. It would be the last thing that we could even remotely consider helpful if we break our Globex low and begin moving to the downside. So it's worth putting it on there, but I wouldn't expect it like a handrail. I wouldn't trust it. I wouldn't give it any value. We had a micro double top this morning in oil. It seems to have calmed down a little bit now, kind of flirting with that VWAP level. The S&P and the NASDAQ are both holding above VWAP, but keep interacting with it. We're just barely holding on to this gain that we've got this morning. The VIX is asleep, so maybe somebody needs to kick that thing awake. The dollar has started to expand this morning, broke its Globex high, gave us a Busby, and has begun the march to the upside, and it did it alone. It did not move with the VIX. Really important to recognize that these two are decoupled at the moment. I've been saying for the last week, if we maintain below 105 in the dollar, then we can continue to expect a bullish push to the upside in the stock indexes. And I'm still holding to that logic. We were going to bring in the 104 and moved that benchmark down and say, as long as we stay below 104, then we would continue to look for a bullish move in equities. But we didn't maintain below the 104 long enough to even be able to bring that argument to the table. So now it's no change. As long as we maintain below 105, we have the capacity or the open sky initiative in the NASDAQ and in the S&P to continue that bullish move. But if we see the dollar breach and break above that 105, then I would expect to start to see a move in the equities to the downside. That same argument can be made with oil. If we see a great expansion in oil to the upside, then we have an expectation that the S&P and the NASDAQ are going to begin moving down, or that there's going to be a lot of downward pressure put on those equities. They can fight the pressure, right? It's not a teeter-totter where one side goes up, the other side must go down. We're not saying that. It's more of what's more likely, right? It's that kind of argument. Bitcoin holding above the VWAP. Uh, Small caps, the Russell holding above VWAP, but barely. I mean, we're talking about markets that, just like with the S&P and the NASDAQ, they're flirting with the level, right? It's very weak at the moment. So we want to see this all firmed up. We want some structure behind this. And with things going on this morning over in the European market and the European news, and in fact, we just finally got that market wrap, something that normally we would look at in the morning before we get over to the charts. We want to check that market wrap and see if there's anything's going on. Treasury bonds declined, dollar index shows no change, currencies related to commodities increased. It's the argument with the central bankers right now that I'm really watching. I'm not going to butcher their names, but there's 3 different people here at the ECB with an argument going on between hiking 50 basis points and 25 basis points for July. And the president is going to be out speaking, the European central banker president, right? They're going to be out speaking this morning. And we want to just make sure that she doesn't start throwing shade and causing sparks. And she could really light this market up this morning. I will be streaming this afternoon at 1 o'clock. We're going to continue the discussion of options Omega backtesting, and I'm going to point out maybe some swing trade logic, or do some swing trade discussions, maybe even put on a couple of swing trades if we find anything. Obviously, that's a lot, right? Maybe doing a stream for like 2 hours and having a little bit of a discussion about backtesting, while also having a discussion about taking some swing trades. The swing trades that I would be most interested in focusing on would be directly connected to those mechanical trading systems that we talked about last week. One of the things that I heard most on the feedback from the options Omega back test from last week is that the people who don't understand options to begin with don't really understand the value of that back tester because they don't know what settings to change. They don't know anything about spreads. So I get that argument. We're very likely going to dig a little bit deeper into the logic behind the iron condor, since that's where we left off, is the back test on the iron condor. So we're going to do a little bit of a deeper dive into irons, what they look like on the risk profile, how we generally engage them, right? We'd normally sell irons to open, the logic behind them, why we use them. So we'll spend a good amount of time on that, call it review, and then dig into the back tester again, right? Because we're not done with it. We didn't end last week with a mechanical system that we can use yet. So there's still work to be done. At 1 o'clock, if you miss it, it'll be recorded. And yes, it's 1 o'clock Eastern. Really tired of that question. All right, sectors that are up this morning. Since we're bullish, it's easier to start out with what is not up this morning. The back testing software is called Option Omega. Or, yeah, I said it right. Options Omega. As far as I know, they're like the only back testing company in the world that uses intraday data down to a 1 minute time frame. Absolutely phenomenal stuff. We have affiliate links so that you can get their service for half off. If you go to the website that I just posted in the chat, on the right hand side, you'll see the Options Omega affiliate link. So bonds are down this morning, yields are up, right? And the marijuana sector is down this morning. It really looked like we were going to get a little rowdy going into the close, but all of that's gone. At the moment, what we want to see in that sector is that it holds above yesterday's low. Now, I don't think that MJ does a good job of representing the marijuana sector. So what I did is went and gathered up a lot of the top names in that industry and built a watch list out of it, like building our own index, right? And looking at that list, a lot of these are showing that they're up this morning, but it mainly, I would argue, because there just hasn't been any volume this morning, right? That they're still up based on yesterday's values. That's not true in Canopy. That's up this morning, looking like a topside breakout is possible. Looking for maybe a follow through there. And maybe Cara Therapeutics. Got to look at where that print was. No, that's last night's print. You always have to be very careful when you see things in the pre-market with these percentage changes, because it may be a percentage change from after hours, not pre-market. Right. So just seeing the change in percent alone isn't enough. You want to actually go in and get a timestamp on that. And if it's just a single dash, like we have here on Cara, that's not indicative of anything, right? It's just a single dash. We want to see some real volume behind it if we want to consider that uh, showing any kind of real value. Right, so we talked about what's down this morning. We've got quite a few that are flat, the different sectors out there. And then we start getting into what's positive. Energy's the top names on the list: XOP, XLE, and USO. Those three sectors this morning are the most gapped this morning in the pre-market. Behind that, we got healthcare, and then we've got semiconductors, airlines, real estate, natural gas. And it's worth noting that all of those are considered risk off and defensive in nature. And we don't really start to see any of the offensive sectors until we're midway down the list, right? Even the Bitcoin ETF is up more than our offensive sectors. But finance is up this morning nearly 1%. We have to have finance, technology, or consumer discretionary. We have to have one of those three. Without one of those three, we cannot see a rally continue or sustain a move in the S&P and the NASDAQ and the marketplace. So if you don't have at least one of those three, forget about it. Consumer discretionary isn't enough on its own. Finance is enough, but you'll see a rally more in the S&P than in the NASDAQ. Technology is enough, and there is technology in the S&P and the NASDAQ. But if finance is down and tech is up, you can't have that. So you're going to need something like finance flat and tech up, or both up. That would be better, right? So I want to keep your eye on these sectors this morning. We're continuing to look for any confirmation that this rally from Friday isn't done yet, right? And yesterday's consolidation brings in the argument that there's still a good move to the upside ready to unfold. The next 7 to 10 days are supposed to look really bullish. So we can break the low today and start getting negative. And with what's going on in the European central banks this morning, that's definitely on the table. But the common thesis right now is more topside first, right? This is a bear market rally, and the rally hopefully is not done yet. So we got finance leading the way. Emerging markets, which is how we gauge global risk on sentiment. The devil's metal, silver, and then tech and consumer discretionary. Unless I slid past it, it's in there somewhere. Boom, boom, boom. Must be on the negative side. Or I'm just moving too fast. So what those 11 legacy sectors don't do for us is they really don't break out things like the crypto market or the pop market or the EV market. So just like with the pot stocks, I made a list. The crypto list here comes from the Smalls Exchange with their futures product. I just opened up their index and took the names out of it, put it in here for my own index. As we can see, crypto is doing really good, including the companies that are heavily vested in blockchain or are heavily vested in crypto. So PayPal this morning and TSM, Monster, Mara, Riot, kind of the familiar names that you would expect, right? Even Nvidia is up 0.5%, but AMD is still dragging its feet. So crypto is looking really good. You know, if we start to roll over and dump all of these crypto names that are up a lot, they're going to be one of my targets of interest. The EV market also looking really good this morning. For the most part, really bullish. One of the names that's leading, that is most popular, is Li Auto, but behind Li, you've got NIO. Both of those looking really good. They're starting to fade off a little, but so is the rest of the market, right? And it kind of makes sense that they're moving in lockstep with it. But we do still have some of the old school names like GM and Ford are both up this morning, at least 1%. Tesla's up, but definitely not leading the pack. And you better watch that one closely, right? This is the weight that we apply. Just like consider the weight of a exponential moving average versus a non-weight moving average, like a simple moving average. Tesla's like that front weight. All right, that's what I got, everybody. I will see you all at 1 o'clock in the main, we don't call it the main room, in the stocks and options chat room. I'll see you all there, and we'll continue with the options Omega back tests.